Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Friday, April 17, 2009. The euro-dollar pair continued declining, breaking below support at 1.31, which we alluded to yesterday. The pair reached 1.3030 before finding support, which implies that it may be conforming to its downward channel. The euro is being pressured by the same sentiments that have hurt it the latter half of this week, and that ECB officials seem at odds about whether to move to unconventional methods in order to stimulate the economy. In news from the Eurozone, the trade deficit narrowed to a seasonally adjusted 4 billion euros in February. Exports were up 0.5%, while imports were down 0.8% on the month, though figures from the same month of last year showed very poor readings. For example, exports to the US compared to a year ago were down 27%, those to the UK were down 29%, and exports to China fell 26%. The euro-yen pair fell below 129 today, testing the area near 128.85, following a test of 121.50 to start the session. That was a slide of 245 pips, despite higher stocks in Europe. The yen increased against most of its key rivals overnight, as Asian traders sold higher-yielding currencies for a second straight session, though yen strength extended into European trading. Japanese data showed the services sector declining 0.8% in February. Household confidence, though it did improve to post a reading of 28.9, still came in below expectations. The Bank of Japan also cut its economic evaluation in 7 of 9 areas as a result of weaker spending amidst the deepening recession. In Switzerland, retail sales fell more than expected in February, sliding 3.8% compared to a year ago. That undershot expectations of only a 0.2% decline. Consumers in Switzerland are feeling the pinch of higher unemployment and a weakening economy, and as a result, are spending less. The dollar-franc pair saw a strong climb today, surging 220 pips from its open near 1.1460 to trade near 1.1680 to end the week. That pushes the pair above its high to start the week near 1.16. The franc was pressured against its other currency pairs, not only as a result of the weaker-than-expected retail sales data, but also on comments from Central Bank President Roth that the bank would continue currency purchases as long as necessary in order to curb the franc's appreciation and prevent deflation. Consumer confidence in the U.S. jumped higher than expected as of mid-April. The UMISH Sentiment Index rose to 61.9 from March's 57.3, as both the current conditions and future expectations subgauges rose. The data adds to other pieces of reports recently that are showing that the worst of the recession may be over. The survey also saw a strong uptick in consumer expectations for inflation for the next year, rising to 3% from 2% in March. The dollar, as we saw earlier, was up against its key rivals today. The pound-dollar pair slid from its open near 1.4950 to settle low near 1.4760, breaking below recent support. The price action this week has formed a head and shoulders pattern, and today the neckline was even retested as resistance. Since the 1.5050 level was the highest the pair has been since early January, there is a chance we could be seeing the start of a reversal, so it's worth monitoring next week. Inflation in Canada remained subdued as the monthly rate saw a smaller than expected increase of 0.2% compared to a 0.7% rise in February. The annual rate saw a growth of 1.2%, also below expectations. The core indexes, though, did show higher than expected readings. Still, the headline figures imply that there will be continued disinflation in the economy as it continues to slow. With inflation not a major concern, the Bank of Canada may cut rates one more time next week from its current 0.5% level. Also, speculation abounds if the bank will begin to use quantitative easing, as they have indicated they will outline a framework for a quantitative easing program, but have stopped short of actually committing to such a course of action. The US dollar-Canadian dollar pair rose for a second straight session, breaking above the channel resistance level we have been following. The pair then retested that resistance level as support. Still, the pair failed to break above its high from 2 days ago near 1.2180, so we can either be seeing the beginning of a new trend or the pair can be going into a period of sideways consolidation. Another rate cut and the start of quantitative easing will pressure the Loonie, though. Next week starts with producer price data from Australia, followed by consumer inflation from the UK. Germany releases data on economic sentiment and wholesale prices. Canada, meanwhile, will decide on its interest rates. And that wraps up this week's coverage of the Forex market. Thank you for joining us here at cmsfx.com. And from all of us here, have a great weekend.